Hi and welcome back to Cheeky Crypto. My name is Nick, and today, guys, we're going to be talking about Bitcoin. I am obviously away for the night here over in Warwickshire, but I thought it was important that we do an update on where I think Bitcoin is going, considering the big break that it's had to the upside. So as I get into the video, if you find it useful and informative, smash the like button. I do appreciate that. If you are new to the channel, then why not go ahead and subscribe, tapping the bell, selecting all the notifications, and in doing so, you will be kept up to date with everything that we do here at Cheeky Crypto. Okay, let's jump right down into this one. So let's take a look at what's going on here with BTC. So as you can kind of see here, we have had this large break to the upside. We've left behind two fair value gaps. Okay, so for those who do not know, this is Bitcoin paired up with USDT. We're on the BitGet exchange with Spot, and of course this is the daily chart, right? And we can see the two fair value gaps that have been left behind. Okay, now these are the two latest ones. There's actually a series of these left a little bit lower. Now I did see in the comment sections of yesterday's video a lot of people kind of considering or concerned about maybe the idea that we'll never come back down to these fair value gaps. Now these fair value gaps have a historical approach where they do have a tendency to want to go down and get filled out in the same way that you see this with CME gaps with the futures market, where the futures market CMEs, you have a different closing position than you have the next day's open, and those gaps also have a tendency to wanting to get filled out. Now, obviously, this is no guarantee. It's not a guarantee that these things happen, but it's something that you note from time and time again within the price chart that you have a tendency to actually go down and fill them out. Now, I also speak about how these gaps are created. They're created through imbalances in the order books. Essentially, these gaps represent areas in the price chart where there is no liquidity, right? And if there is no liquidity there, then price has to move either up or down past that particular price range, okay? And that's the volatility which kind of creates gains, or unfortunately can get people wrecked in the market. Now, there's a thing called liquidity hunting. Liquidity hunting is something that I think a lot of retail investors probably should know more about. It's a little bit difficult to do, but essentially you push the price into the direction of the liquidity, or more often than not, you actually follow the liquidity hunters pushing the price into the liquidity. And that basically allows you to kind of map the direction of the market a little bit more efficiently. That's kind of where smart money concepts, which is the chart that you're looking at here, kind of comes in, because essentially this chart is showing you pockets of liquidity in these fair value gaps. It also shows you the manipulation that is going on from smart money, which is basically big funds coming in and out of the space. So here we can see that we've left behind a fair number of fair value gaps, right? Pretty significant ones at that. Now you can see these across different time frames as well, including the weekly time frame that goes all the way down to $17,000 where a gap was left behind. Now I say it's not a guarantee that these price action must go down into these ranges, but it's something that we can note that is something that we have to consider as a possibility, and as something that I think has a high probability of actually occurring. Now, there's a lot of things going on in the real world that can affect the price action of Bitcoin, right? And obviously, we all want a bullish market. However, it's really hard to feel bullish on the market when we have certain things happening at a macro level that simply just doesn't make sense for us to be in a bullish market right now. And we saw something that Chris said a few months back, which was that if the Fed paused, then we'll probably expect to see a bit of a rally to the upside. Okay, and that's kind of what we've seen occur, right? We've seen the price action really moving up quite nicely here as the Fed have paused, right? And that's kind of as expected. There's nothing terribly too unusual about that in the way that essentially that's going to be seen as a bullish movement. However, one of the things that not a lot of people seem to realize is that when the Fed pivot, there's going to be an almighty crash. We see this time and time again. And so, although this move to the upside looks great and it looks like we've got some green in the market, we have to kind of prepare ourselves for a worst case scenario a little bit further down the line, which is that we probably are going to have to fill out some of these fair value gaps. Whether that is a new lower low or not, I still personally think it will have to be, because we are not seeing big funds come in yet. They're still in preserve capital mode. So for the most part, although we've had a really significant move to the upside, we're yet to break the local high. There's speculation about cup and handles, but we don't really have a nice cup. So I'm not expecting a handle to appear. And for the most part, without breaking that $31,000 high, which is still possible that we can do, because we've consolidated down quite nicely on the 1 hour and 4 hour charts, that allows us to basically have that break to the upside. And if we do break above 31,000, cracking, that's great. We have to bear in mind that there's a CME gap at $34,000 to $35,000. And again, price likes to go and fill those gaps out as well. So all I'm saying here, guys, is that although price action is looking pretty positive and we are pushing up, I don't think it's going to be all that long-lived. I think essentially that we have to move down. There has to be a nice healthy correction, and the market needs to respect the fact that there are pockets of price action where liquidity just simply wasn't, and liquidity should go back down too. And for the most part, we've got CME gaps at 34 to 35 and also at 20 to 21, which means two CME gaps that we spoke about yesterday also have a high probability of wanting to get filled out as well. So all in all, guys, I think, I keep this nice and brief because obviously I haven't got good audio, so I want to apologize for that. And all in all, I just think that it's great to see some green in the market. It's great to take advantage of that from a smaller trading point of view, but we can't get ourselves too carried away, because essentially I think that at a big macro level, we have to push the price action back to the downside. And for Bitcoin leading the market, that could have pretty dramatic effects and do some pretty decent, or do some damage, I should say, to the altcoin market as well. So there's a lot of things to kind of consider here. Now, I'm not saying that we have to have a new lower low, because we don't have to have that for Bitcoin, but we have already seen new lower lows on many altcoins recently. And you don't have lower lows in bear markets. Like in a bear market, you have lower lows, right? But in a bullish market, you won't have those lower lows. So although Bitcoin doesn't have to have a new lower low, it doesn't necessarily make it a bullish market, right? And there's lots of factors for bullish times and lots of factors to consider in the definition of a bullish market. Okay, and obviously that's not been met yet, right? We see volumes are very significantly lower than they had done or have been previously in the previous market lows as well. So all in all, I'll do a proper update tomorrow when I'm back to the studio, but I just wanted to kind of give you a brief update as to kind of what I'm looking at in terms of charts, and essentially I'm not thinking that we are doing anything overly impressive at this particular point in time. I'll jump back into the wallet data as I did yesterday tomorrow as well, so we can take a look and see if the larger investors are behaving in the way that we'd expect them to during a bullish market, or whether they're looking at this as just exit liquidity as well. So do tune in for that one. And other than that, guys, I think I'm going to leave this video right there. If you found it useful and informative, smash the like button. If you're new, subscribe, and don't forget to join us down in Discord. Until the next one, though, guys, have a fantastic day.